Hi, this is Thomas. Welcome back to the course Management Accounting. Today's topic is activity-based costing. In this slide we have the steps involved in activity-based costing, which will be more easily understood when we go to an example. So let's proceed and look at an example of activity-based costing. Again, here is some theory or a conceptual comparison between activity-based costing and traditional costing. When we see our examples, this is going to be clearer, but to begin, let's see the conceptual difference. Under traditional costing, there's one cost driver. We add all of our overhead. We determine what activity drives that overhead. That's usually labor hours or machine hours. And then we calculate the amount of overhead spent per unit of activity. Again, usually labor hours or machine hours. When we use activity-based costing, we're more precise. We group some of the overhead into a category based on what drives that cost. And we sum those expenses, we divide by the units of that activity to calculate a cost per unit of activity. We do that 2 or 3 or 4 times, and then we have different cost amounts that we will apply to our overhead based on activities that are more varied than just direct labor hours or machine hours. And again, looking at an example, which is what we will do next, will make the concept clearer. So let's look at our company example, starting with allocating overhead based on traditional costing. We have 4 categories of overhead for the company. The total is $250,000. And let's use labor hours as our activity. We use labor hours for the basis of allocation. We see that for the 2 divisions of the company, we have 40,000 total labor hours. 40% of those are in Division A, 60% are in Division B. We allocate the total overhead of $250,000 based on those percentages, giving us allocation of $100,000 to Division A and $150,000 to Division B. What we haven't considered is the fact that these 4 categories of overhead might not be driven by the number of labor hours that the company is using. There might be other drivers that are causing these costs that don't have a direct relationship to labor hours, and that's where activity-based costing comes into play. So let's look at an activity-based costing concept applied to the same company, same amount of overhead. We'll use labor hours as the drivers for indirect materials and indirect labor. But for factory rent, the key driver is square footage in the factory. And Division A and Division B use, of the 30,000 feet of square footage, 10,000 and 20,000 square feet respectively. And setup costs are driven by the number of setups. And over the period for which we're accounting, there are 100 setups for the company. 10 of those happen for Division A, and 90 of those happen for Division B. So we apply these costs, 4 categories, to our drivers, 3 different drivers, labor hours for the first 2 categories of overhead, and square footage for factory rent, and setup for setup costs. Notice how the percentages change for Division A and Division B, and this is why the end result will be different for the allocation. The labor hours are, as before, 40% Division A, 60% Division B. Notice that the rent allocation results in different percentages, 33% and 67%, and the setup costs also result in different percentages, 10% and 90%. What this tells us from the percentages is that Division B is actually incurring more of the costs, or we would say driving more of the costs, and we know that now because we're using more precise cost allocations. They're using more of the factory space, and they're using more of the setup costs. Thus, the total overhead we're allocating to Division B is now more than it was in the traditional costing example. So our total costs allocated to Division A, when we add up these 4 calculations, $72,667, and the total cost allocated to Division B, $177,333. In summary, we see the difference is that we are, with activity-based costing, we have a lower allocation to Division B. In evaluating traditional costing, we are over-allocating our cost to Division A, and we are under-allocating the cost to Division B. Notice the offset. The totals are the same, and they need to be the same. We are, in fact, spending $250,000. But it's important that we allocate accurately, because in allocating accurately, we can make the best pricing decision that is good for the company and good for the customers. When we over-allocate, as we're doing with traditional costing in Division A, we might set the price higher than we should or higher than we need to and have uncompetitive pricing. In contrast, in Division B, when we're under-allocating costs, we might set the price too low when we could actually be losing money on the production and sale of Division B without even realizing it. So the benefit of activity-based costing is, while it takes more time, and anything that takes more time costs more money, it gives us more accurate information, and that enables better decision-making on the part of the company. This concludes the lecture on activity-based costing. In class, we'll work through examples to make sure you know how to apply these concepts in a real-world setting, and I look forward to seeing you then.